Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going on out there? It's July 5th. I'm Frank Curzio, it's the Wall Street Unplugged podcast, where I break the headlines and tell you what's really moving these markets. So doing something different today. Hopefully subscribers got an email, doing a live broadcast. So if I curse or make mistakes or whatever, feel free to call me out. I want to thank Jeff Bishop, RagingBull, for hosting this. And I met Jeff a few years ago. I believe it was at a conference. And he was sitting at a table all by himself, and he came over. He's like, look, I don't have any friends. Could you be my friend? I said, sure, I'll be your friend. And for the last 2 years, we've been good friends. In all seriousness, Jeff and I are market junkies. And we discussed for the past 2 years when we met, said, how could we work together and, provide more value for our subscribers? And he said, why don't you come onto the platform and showcase him through our subscribers and stuff like that, because Jeff's a great guy. Again, market junkie. This is what we do. We'd probably do it if we didn't get paid. Maybe I shouldn't say that because, we do have services that we sell. But just, interested to hear your thoughts in this format. I know most of you guys are day traders and regular traders, and I'm going to provide you as many ideas as possible. And I just wanted to give you a quick background, since we're going to have a lot of new listeners and also viewers here. I've been doing this podcast, Wall Street Unplugged, for 15 years. And pretty much one of the first ever to do a financial podcast. Everybody has a podcast now, so it's not really a big deal, but it's a lot of work that goes into the podcast. We interviewed a ton of people. This goes out to tens of thousands of listeners. We're looking at it being downloaded in over 100 countries, which I'm always, just in awe of. I can't believe it. I don't know why people want to listen in 100 countries, but it's awesome because it creates this massive network that gives me real-time data. And a lot of data that you get is usually lagging. So the real-time data allows me to provide more ideas, contact my network, and again, find different stocks and different things just based on some of the listeners and if they own different shops, or some of them are high school or college students. But again, everybody is smart in some way and sees certain things in real time. And it helps us tremendously to provide new ideas for all of our clients. And we're 100% independent, so I don't get paid by anyone. I've been doing this for 30 years, and being independent means that we have no agenda. So I'm going to piss off people. We don't care, right? So the bottom line is we want to give you great ideas, and we make money by providing those good ideas because you subscribe to our services. And if we're good, you're going to continue to subscribe. So the fact I've been doing this 30 years, and my late dad did it for 30 years as well, shows you that, our track record must be good in order to be in business that long. So with that said, enough of the intro, enough of the BS, and let's get to it. So you're going to see a lot of volatility today, this week, back from the holiday. We're going to have the Fed minutes come out probably in a little while. So you see a little volatility around that. I don't think it's going to be too much surprise. They're planning on raising rates further because they're seeing inflation indicators are not really coming down as quick as they want. And just put in perspective, people think we came down. We're at 4% right now. We're at 9%. Yeah, we've come down. I think we're at 4.5 in the core. If you go back to 1991, you're looking at annual inflation has never been below 4% since 1991. So even though we're 4.5%, it looks really good compared to last year. 9% was still very, very high. And it gets that 2% target, means they're going to have to raise rates further, especially with strong unemployment, wage growth, which we're going to see on Friday, right? More volatility. So that's short term. Next few months, guys, and I would say second half of the year, next 2 quarters, I'd watch out. So what I'm seeing here, profit margins are rolling over. They haven't really rolled over. Companies have pricing power. They're losing the pricing power. Liquidity is going to come out of the market. We all cheered on how the debt ceiling was raised, which was, a great thing. Otherwise, the world's going to end as we know it, right? I'll exaggerate a little bit. But now the Fed actually has to raise that money, which is $1.2 trillion. And when they raise it, that means it's going to come from banks mostly who have $500 billion in reserves. But that's liquidity being drained from the market, right? And that's important because the last 6 months in this market of how it really, really surged, we saw a lot of liquidity come into this market, which surprised a lot of people, surprised me as well. We're going to see a lot of liquidity being removed from the market. Also, 43 Americans are going to have to start paying their student loan debt again. 3 years. Can't believe it. 3 years that program lasted for, right? Where they were able to pause those debt payments. But that's a demographic that spends a lot of money on shit. Discretionary stuff. And now That's $400 a month on average for those people. Doesn't sound like a lot, but it's 17 billion a month coming out of the market. Again, liquidity coming to the market. P's are stretched at 20 times forward earnings. You look at the 10-year average, is about 18. However, the 10-year average was zero interest rates. What do we see now? The 2 years closing in 5% right now. So there's a lot of risks to the marketplace. All this while the Fed is likely going to continue to raise rates to control inflation. But what's changed? Because that scenario really hasn't changed that much, and we've seen stocks move up incredibly. But what's changed is we're seeing sentiment indicators roll over. And I'm going to share my screen here to show you exactly what I mean. Have some fun here. Okay, so when we look at sentiment indicators, then we could start with, I'm going to start with a bunch. So I have a whole bunch of pictures up here, and let's go with the Goldman Sachs reading. So all this data, guys, is from today. Okay, a lot of this data is from today. I'm going to highlight. This is the stuff to prove my point that happened, a month ago. If you look at this chart, this is today. This is stuff that I get. I have access to all this research. Yes, I pay a lot of money for it. And I like to share my screen even in our videos that we do for our subscribers. But you see, this is the bull bear indicator for Goldman Sachs, and it's at 80, extreme greed. This is a contrarian indicator, right? A lot of times, extreme fear for a while, a little fearful, and then the market moves up. At extreme greed, it's usually a contrarian indicator. It usually sees that we're at top of the market. It's been like this for about 2 weeks now. You're looking at the VIX near record low, and if you look at equity positioning among asset managers, you're seeing them push more into equities. Makes a lot of sense if you think about it, because a lot of them are underperforming because a lot of the gains have been coming from what? From a select few stocks. It's spilled over a little bit, right? So discretionary stocks, cruises, hotels, look performing a little bit better. But overall, if you're an asset manager, you have to put money to work. And if you're getting your ass kicked by the index, that means that you can get fired. You're not going to get a bonus. You're not going to get paid. And this is pretty much a scary sign. And again, this is from today. So this is positioning U.S. equity futures by asset managers. Okay. Look at this number right here, how much they're going into equities. Notice this. All right. This chart goes back 2012. So right here, this extreme. This is called FOMO, fear of missing out, right? They're like, holy shit, we got to get in. We got to perform. And they're buying what? The biggest companies in the world to help their performance, right? Against their benchmark. Well, look at the last 2 times right here. What happened here? Right here is when the market crashed in 2022, when it got this heavy into exposure, right? When it came to equities, and look at right here. Another time, right? This is with COVID. So if you're looking at these extremes, these are things that I'm seeing on top of fundamentals, which fundamentals drive stocks and markets long term. But trading, you're looking at sentiment indicators that make me a little nervous. You're looking at breadth. And when I watch CNBC, my job is to watch CNBC, right? I'm not crazy about CNBC because my dad used to be on CNBC. It was awesome. They only like 10, 12 people on there. Now it's, there's 100 people on a day and 50 going to say it's a bull market, 50 a bear market, and confuse the shit out of you. But it is a consensus, right? So when you watch the CNBC, and if you could prove the consensus wrong, either way, if, hey, I think they're conservative or I think they're aggressive, that's how you can invest and make money. That's what we do here, right? We want to go against consensus because that's what's going to make stocks move. So when I look at the breadth of the market, CNBC, they've mentioned, oh, it's spilling over. The breadth's not better. Okay. When you usually see markets like this and you're looking at the breadth here, look at over here, 5, 6, 7, 8, right? It's 2009, where we saw the breadth. This means more companies are participating as in new highs as the market goes higher. And over here, look how low we are. So it's concentrated to a little bit more than the 10, which represent 30% of the S&P 500 now, but not so much spillover that we're used to seeing in a true bull market. So to me, I wouldn't call this a bull market. Doesn't mean we can't go higher from here. We saw 1999, the NASDAQ. People were right. 1998, they were like, you got a sells market. You're crazy. It's overvalued. And they were right. But in 1999, the NASDAQ doubled that year. Okay. Doubled to 5,000. Eventually fell down below 1,000, right? So the people in 98 were eventually right. But you never know how far markets can move. They're usually going to move a lot further than you think. So another thing too, when you see retail spending is pretty bad. And let me take this off screen for a minute. So retail spending, I'm hearing where you're looking at Macy's. Macy's came out and said it's much worse than expected. Nike, much worse than expected. Walmart, much worse than expected. Walmart's doing better managing costs. So that stock's hanging in there and doing well. But they all said the same thing. Consumer spending is slowing much more than they originally thought. And what they originally thought at the beginning of the year was they were going to see pressure. They didn't think they were going to see this much pressure. Now, if I share my screen again here, let me get out a couple of these things. So this is a pretty cool service. I do not make money to talk about this service. It's amazing, especially if you're a trader. It's really cool. It's called briefing.com. And this gives you just like a Cliff Notes versions of everything that's going on. And, I'll view it. And this is something I pulled up. So this is the regular. So you'll see you bring in insider trades and all kinds of news, all the news that's coming out, all the news flow, again, live. And it helps me generate ideas and just know what's going on. Again, I use the app and stuff like that. But one thing that came up today at 9 a.m., Knight Swift. It's a company I'm familiar with. We did pretty well and we recommended it. But Knight Swift is one of the largest trucking companies in the world. And they came out and lowered their estimates. And they did it in a weird fashion, right? They came out and said, talking about the acquisition of US Express Enterprises, and then they buried it. And they buried it in here. So this decline in operating performance, this was right here. It operates was largely driven by the full truckload market, where persistently soft demand has caused volumes and pricings to be under greater pressure than originally anticipated. While costs remain stable on a sequential basis, this dynamic is expected to drive an estimated 11 to 1,200 basis point degradation in consolidated operating margins year over year for the quarter. But more importantly, this line right here. Okay, these guys deliver everything by trucks, and they're saying we're seeing much more pressure than expected. So again, a very risky market where what do we have in the past 10 years? We had a Fed that bailed us out no matter what. Right? We had 0% interest rates. We had unlimited QE, which is just buying of assets, printing money to buy assets like mortgage-backed securities and treasuries. And that's not there anymore. It's not there anymore, which makes this a risky market, especially when you can earn 5% risk-free. Now, we always get caught up with the bull-bear debate on the markets. I don't want you to focus on that. Okay. Bears have been wrong. I've been wrong. I've been bearish on the market overall this year. And that's based on data, right? Usually we see higher interest rates. Technology companies usually get hit. We're seeing earnings decline year over year. It's 3 straight quarters. The biggest names, Microsoft, Amazon, Apple, Tesla, they're seeing their largest growth segments slow. They're pushing into AI, which is not going to be a big portion of the business outside of NVIDIA. But we look at Microsoft and Amazon, both are seeing slower growth on a percentage basis in cloud. You're looking at Apple for the first time. They're giving away their newest phone for free by trade-ins. I'm in this industry. I actually owned a small business that I really didn't want to own, but now I own it. Does pretty well. It's just a phone part, right? We fix phones and stuff like that. So I'm very familiar with this business. And Apple saw slower than expected growth in services as well, right? Yet the stock keeps going higher. You look at Tesla. Tesla's low in prices and margins got hit. They just came out with production estimates that beat estimates are great. I would love to see the profits and the margins on that because they're lowering prices and they're doing a great job because they're pricing so many companies out of the market right now and really crushing it. Ford, for example, very surprised at $12, $13 a share, considering they lose $30,000 on every EV they saw. GM too. I mean, the EV trend, if you're into it, it's not, it's going to be much slower than people believe. They just can't make money even with the tax credits, most companies. However, getting back to the markets here, instead of being bullish or bearish, I've been long stocks, a lot of individual ideas, because I've seen a huge disconnect. And when I say disconnect, I'm talking about like the companies and the stock price where they're trading is in small caps. And we have a newsletter, Curzio Venture Opportunity. It's a high price newsletter that's on fire right now. And I'm happy for subscribers. Last year wasn't that good. And this disconnect is taking place because you're seeing so much concentration and everybody talks about the big mega tech stocks and stuff like that. But if you look at this, I'm going to share my screen here again. And here we go. So if you look at the NASDAQ, right? The NASDAQ and the Russell performance here. You see that chart. I'm going to make it a little bigger if you can. Okay. I've covered small caps for 30 years. I've never seen a gap this big. Okay, so if you're looking at the NASDAQ, right, being up 28% and the Russell being up 4%, right, this is a massive, massive disconnect, right? Usually when you see a risky market or bull market, actually technology is considered risky as well. Small caps outperform on the way up and usually underperform on the way down. You don't really see this. And it's resulting in everybody not paying attention to small caps, which I effing love, because it's providing lots of ideas. And just one more picture I want to show you just to show, because I just saw this. This is from today. This is the forward PE, small caps or large caps. Look where this is. This chart is 1979. You can see that, 1979. So we're looking at 20 years It's never been like this where small caps have been this undervalued compared to large caps. But if you take out this, right, which is 2000, right, during the dot-com bubble, it's 50 years we're looking at. That's a disconnect, and I feel like nobody's looking here. Now, you want proof to that? Here's some of the ideas that we've been recommending, and I want to share some of these because I still think they have tremendous upside. Uh, Stocks that have been left for dead because it's still, if you look at the Russell, is still 25% off of its November 21 highs. That compares to about, I think, 6% for the S&P 500, 7% for the S&P 500. One of those names is Rivian. Rivian, you're seeing in the news. Holy shit, it's great. And I can bring up a chart really quick. It's just stock charts, right? It's ugly chart, but you guys could see it. So you're seeing this breakout of a 1550, and this is on news, right? This is on really good news. This stock really took off. And a lot of people would buy it if it's, on technicals, it looks great. And again, might have topped out here because it was up 6% on news. Again, positive news from today from Amazon and delivering more EVs, EV vans for that order. But the stock has come down just a little bit off of that news overall, with the market being down a little bit here. But when you look at Rivian, I think Rivian has unbelievable upside from here. So you're looking at this week. What changed? So Rivian pre-announced, just like all the companies, Ford and GM just came out with their numbers. I don't know if Ford released, GM just released, Tesla released, and it's not the quarterly results. This is the quarterly production numbers only. And most of them are beating on the upside. Tesla beat, and that's why that stock went up yesterday or Monday. But on Monday, Rivian pre-announced Q2 production. And they said they produced 14,000 vehicles, basically. This is versus 11,000 estimates. But I love this number, which is important, because they break it out as vehicles delivered. The big difference between producing them and delivering them, because you could produce 1 billion vehicles, but if nobody's going to buy them, you have 1 billion in inventory and you're going broke. So out of the 14,000 produced, 12,500 were delivered, right? Easily beaten estimates. So it popped 15% plus on that news. Then it popped today again early on because they began delivering their EV vans to Amazon. This is in Europe, 300 of the 100,000, right? That was just in Europe, but they also delivered another 3,000 so far. Amazon's their biggest client. They have 100,000 order with them. And the reason why this stock crashed for most of last year is because they failed to deliver. They had problems scaling. And it's important to recognize that when you're finding ideas, because a lot of times you'll see a stock get absolutely nailed. Take Meta, for example. Why did Meta get destroyed 6 months ago, 9 months ago? It's because Apple changed their privacy policies, right, which hurt advertising. It was also, they were folks, they had very, very high costs. TikTok was eating their lunch. Well, what happens? They launch Reels, right? Seeing massive demand for Reels. The advertising market came back, so they're not impacted by Apple and iTunes Store anymore. And advertising is really like picking up. And what happens with this stock? It absolutely takes off because you took those negatives that pushed it down that no longer exist. In small cap world, I'm seeing all these negatives all over the place, right? And they address them. You can always address what you see in front of you. They address them, and now these stocks are sitting at levels where insiders are buying them. And a name like Rivian would absolutely surge. This is a name we recommend around $14 in our newsletter. And you're looking at these, and you might be saying, Frank, are you cherry picking this idea? You got one winner. You might have all losing in the portfolio. You should be saying that, right? Because you don't know this first time, especially on a live platform. We're RagingBull. This isn't surprising to us. You know why? Because all this information was available in May. You just don't know about it because nobody talks about it. Nobody wants to talk about it on CNBC. That's not what they're going to talk about. It's my job to find these opportunities. And from someone that follows small caps, I'm seeing massive disconnects. Now, I have the screen up here. I'm going to show you. This is a Cantor Fitzgerald report. Look at this from May 10th. Okay, this is from May 10th. And they reported Q1 numbers that beat estimates. This is the first time they beat estimates, right? So you're seeing like, wow, they beat. Look what the stock is, right? Right here. Recommend about 14.20. They had concerns about money. They no longer have concerns about money, right? So look, they have plenty of liquidity, massive amount of liquidity. And now they said they reaffirmed their annual production guidance of 50,000. To put that in perspective about Rivian, I think they're up to 40,000 in the first 2 quarters. Their estimates of 50,000 at the end of the year. They're going to easily produce 100 to 125,000, probably more than 120,000 at the end of the year. And I'll tell you why in a minute. So now they're beating estimates. This is in May, right? And Bloomberg has an article where cornered people familiar with the matter, Rivian's management informed its internal staff that its production capacity could be 24% higher than its guidance. Interesting, because that's exactly what happened now. Everyone's knowing about it, and the stock popped. We're in before it. 11 billion in liquidity. They're burning through about $3.5 billion of cash a year. So they have plenty of liquidity to 2025, right? More liquidity. Again, company that addressed its issues. They couldn't get out production. They needed to raise money. They raised money. The Amazon deal, they were supposed to get out more. Those 100,000 orders. They're projected to get the full 100,000 orders out by the end of this decade. So we're looking at 2030. They're probably going to deliver that in the next 2-3 years. What's important to know about Rivian is what took Tesla 6 years when it comes to manufacturing, production, and scaling, it's taken them 3 years. It's the only EV company out there that's capable of scaling outside of Tesla. Ford's not. They're done. The F-150 truck is done. You're seeing orders on the secondary market. GM too is actually moving away a little bit from EVs. Remember, everyone's going all in on EVs. It's starting to pull back because, and then you have Tesla in the middle of this lowering prices. Well, Rivian isn't impacted by that because they have a higher end truck. It has 300 miles plus that they're driving on one charge. And if you look at the Wall Street Journal, this is from a couple of weeks ago. You had to see the report that was written on it and just testing it, right? It's ranked number one in so many different places in terms of their pickup truck, but they offer SUVs and pickup trucks, which not too many companies do, which means this could be complementary to Tesla and maybe a purchase for Tesla since their market cap goes up about 50 billion a day. When I look at Rivian, I think it's a great buy. I think it's an easy double from here. As a trading opportunity, it may sell off a little bit. I mean, it has moved up 50% since May. But my point here is when I look at these things, these are the disconnects I'm seeing. And I'm seeing them where everyone's looking at the market in the past week going, holy shit, Rivian beat those numbers. And, now they have enough cash. This is all available if you're willing to look, if you're looking in the right spot. It just so happens that, for me, small caps is what I do. And I've never seen, I shouldn't say never, but at least the last decade, I haven't seen opportunities like I'm seeing this in small caps where they're left for dead. They're down 35%. They addressed all the concerns. They're leaner than ever. And this is just one of those companies. Another one is Transocean. So if you look at Transocean, pull up a chart of that, is in oil. Oil has been one of the crappiest markets, which we all know. So Rig is the largest offshore driller. And we recommended this a year ago, and we're up about 100%. Again, I'm not cherry picking ideas, a lot of ideas. And I'll be first to tell you that last year wasn't a good year for small caps, right? You're looking at large caps, you can buy the biggest large caps in technology, and you significantly outperform, and small caps haven't done well. But since April, you're seeing more money come out, and it has to come out. JP Morgan came out with a report where they just over leverage a lot of these asset managers to tech, where they have to rebalance based on their mandate. The percentage has grown so much where that money has to flow someplace. They're not going to really go to cash because they don't get paid their fees. So they want to invest in someplace. And now you're looking at small caps, which offer an amazing opportunity. Again, like Rig, another company I was left for dead. This company just got an upgrade today and from Citi, and target raised to 9. It's a little over 7 right now. I think 720 or 30. And when I look at the oil market, it's been terrible. But when people look at the oil market, they pretty much lump it under one big umbrella, kind of like you would with cloud or software. I mean, and there's a difference in those industries, even in AI. And with oil, there's just so many facets to it where if you're looking at when oil prices come down, you really don't want to own an EOG or Pioneer, who are domestic shale producers for the U.S. They're going to get impacted the most. They're still doing well. The balance sheets are great. These guys can produce, at $45, $50 a barrel, so they're fine. But as oil comes down, those have got hit. You're looking at the majors, which are more, just in every part of the world, upstream, midstream, downstream, conservative dividends. One area that I really like in oil is international. Companies have international exposure. So, large caps, okay, fine. You did well with a few of those. But when I looked at Rig, the reason why it's significant is because of the Russia war. And what happened with Russia is they supplied so much energy to Europe. It was 40% of natural gas energy to Germany. And when Germany started playing hardball with them, they're like, gave you the finger and said, F you, well, we're cutting you off. And Germany realized that, holy shit, maybe we shouldn't have gone so much into alternative energy. They got very lucky because they have one of the most mildest winters on record. Thank God, right? Because we're talking about people dying here. But now, if you look at Europe, they're like, we can't let this happen again. And they are going to spend tens of billions of dollars in order to find more energy. That's going to result in Rig, right? International driller, largest fleets. Day rates are going high. That's why cities, upgrading them. But again, our job is to get in before these upgrades. Just like Rivian, you saw a whole bunch of upgrades today in Rivian. You want to get in before this. How do you get in? By doing the research and being a stock junkie like me. But this is what we're seeing with Rig. It's a great way to play just the huge demand for oil and international and exploring. You could also go to the services companies, and services companies have international exposure. Schlumberger is the biggest. Halliburton, I would recommend, is a good company. So when you look at oil, we had oil news come out, I think, last night. Again, Saudi's going to continue to cut, which makes sense because China is just horrible. And this statistics that came out in China saying that year over year, they had worse, I think it was production numbers than last year. Last year, China was closed. Think about that for a minute. How could it be worse? That's how bad China's really bad. I got great contacts in China. Email me all the time. It's a lot worse. We knew how bad it was. That's not going to be the growth engine of the world. There's still a lot of trouble there. But see, you don't know if you're going to see demand, right, for oil. I don't know. But I do know that prices, they're up a little bit today on that news from Saudis. But I know if they stay at this level, you're going to see rig do well. You're going to see some of the companies that have international exposure do well, and that's what we want to look at instead of looking at oil as this. Every single company. There's a difference between there's probably about 10 different subsectors within oil, and the one that I like are the ones that have international exposure that I'm looking at. Because if oil goes up, you're gonna benefit tremendously. If oil stays the same, these companies are going to see high demand because they have to, right? And you're looking at Europe has to change. They have to change, and they're going to change significantly. And a lot of their capex is going to be directed at this because it has to. They can't rely on Russia anymore, especially with these tensions in a war that who knows when the hell it's going to end, right? Let's be serious about that, right? That's why I like being independent. I don't know what the hell we're doing there. That's fine. But my job is to make money, and that's how we're making money on it. So a lot of these ideas, right? That's what we want to do, generate a lot of ideas. More names in our CVO portfolio is AVAV. That's AeroVironment, one of the largest drone producers. You got to see, just go in the video, Google, it'll be worth it. Trust me. These unmanned drones that you carry on your back, and the new version of these things are incredible, how fast they go and how they're targeted. And we're selling like crazy to the Ukraine, right? Which is free money. Government is free money. It's unlimited, right? There's no accountability there, right? That's why the post office loses billions every year, and UPS and FedEx make money every year. They don't care. But as this war goes on, you're seeing demand for AVAV, and it's really taken off for us. It's another good name, another small cap name we recommended. I don't want to give this one away because it's a recent pick, but it's a maker of lithium ion batteries. It just popped 100%. Again, another name that got crushed. That's the formula that we're looking at. We're looking at small caps that have gotten crushed, address their concerns, and they're just sitting there. And they're coming across our list because you'll see insiders buy. There's a name that we just recommended now. By the way, that lithium ion battery maker is up, I think, 100% since May. Right? Again, things you're not really hearing, they're not covering on CNBC and the media that much. But these are the ideas, right? That's what you want to do. You want to be able to have access to a lot of these ideas. And that's what we try to do with our subscribers. I've been doing it for a very, very long time with great contacts, and I'm a boots on the ground guy. I travel a lot. I go see CEOs, facilities. You got to be in the room, right? That's where you find the best ideas. When you have a couple beers, smoking a joint, hanging out with people, that's where you find the best ideas, right? Be honest. But another new name that entered the portfolio got crushed. It came off. Again, I don't want to give this away because otherwise my Curzio Venture Opportunity subscribers will kill me. This is a name that is in the housing sector, and it's gotten crushed, addressed its problems, and now those problems no longer exist. It's still down a lot. The CEO is buying hand over fist. This is a CEO that's a 40-year veteran. He's on a lot of boards, the biggest boards within the industry. I'm not talking about stock boards, but industry boards. Very well respected, already a big owner of the stock. And I'm like, why is this guy buying the stock? And he's buying boatloads, millions and millions of dollars, right, for CEO. It's pretty big. And they're also announced a buyback. They're buying back 15% of the float. That provides that floor that the Fed used to provide. That's no longer there. So for risk reward, when I see this, plus he was buying for the last 3 months, and you can actually buy this stock below the price, the average price CEO bought it for. That doesn't happen often. As someone that covers small caps for 30 years, you don't see these kind of disconnects. And they happen when you have all this shit going on. High interest rates, right? Super high interest rates. People thought we were going to top out at 3%, 4%, 5%. We might be going to 6% now. Yet stocks are ramping higher while earnings, even for technology companies, are down year over year. They're declining. Usually earnings drive stock prices. You're seeing rates continue to go higher. Again, at 2 years, approaching 5%, yet there's still demand for equities. Even though you can get risk-free for 5%, which is amazing rate because a lot of retirees haven't had that kind of interest rate. So when you see a lot of shit like this going on, it doesn't make sense. That's where you see the disconnects, and that's where you have guys like me. I know Jeff's there as well, trading opportunities where you're like, "Whoa, this doesn't make sense," and that's been providing lots and lots of opportunities for us. But that's pretty much where I am. If you want to know a couple of other disconnects, biotech has gotten annihilated. The amount of leverage that was in the market is incredible. That market started crashing in mid 2021 before the overall market, and it hasn't really come back. I'm looking at biotech names, the area I focus on a lot as well. You have if you're trading, there's a lot of news on phase one, phase two, phase three approvals, right? I'm talking about companies not that have one drug and you're hoping that phase one's okay. If not, they're dead. Drugs that they're making money on currently, they have an amazing pipeline. They have plenty of money. Their net cash is more than what the market cap is, right? Again, you don't see shit like this ever. It's like shooting fish in a barrel right now, which is cool. And I'm happy for my subscribers because, again, last year wasn't that great for small caps, but this is an area that you need to focus on. Even though you're going to see the economy pull back, I think there's risk to a lot of these large cap names. There's still a lot of money flowing in the system. 11.5 freaking trillion dollars was put into the system. 4.5 trillion was put in at the end of 2020, right at the beginning of 2021, when every asset was at all-time highs. Okay, you had housing prices at all-time highs, stocks at all-time highs, collectibles, almost every single asset hit all-time highs, and the government still pedaled to the metal, 4.5 trillion. That's why you're seeing a market where they can't control inflation. I can give you 10 indicators that show that we're headed to a recession, that we're seeing a slowing economy and slowing inflation, and 10 indicators that we're not. You don't see that unless you see a lot of shit going on within the markets, and that's what we're seeing, right? That's why the Fed is more confused than ever, saying, "Hey, this is transitory." 18 months ago, talk about a 180. Not only wasn't transitory, raising rates at its fast pace in the Fed era by over 2,000%. That's pretty crazy stuff. Use that to your advantage. Use the craziness to your advantage. That's what we do here at Curzio Research. For Curzio Venture Opportunities, we also offer a couple of products as well. We offer a crypto product, which is crypto intelligence. Something I've been following for 5 years. I've never made more money in my life than I did in crypto. In 2021, I think there was probably 12 to 15 positions in our portfolio. The average position gain was 640%. The average, right? There's something you can't see in the markets. And why is that? Well, you look at SPACs and these things they come out like 20 times, 30 times sales where they IPO. So, unless you're able to get founder shares and you're a credit investor and know the right people, if you're a regular retail investor, you're buying this shit, pretty much when they're selling it. That's what an IPO is. An IPO is a selling event for insiders. That's what it is, right? That's a liquidity event for insiders. I'm glad I'm going to sell this to you. We're going to sell it to the highest price possible. That's why you saw a lot of SPACs get absolutely annihilated. But with crypto, you can invest in a very early stage of these companies if you know what they're doing. We got wrecked in 2022 like everybody else, but if you look at the past month, the SEC has laid out finally of what they're looking for. And a lot of people thought that the US was going to ban crypto. They're not banning it. They're going after companies specifically that are proof of stake companies. These are ones that has just a few block validators. Don't want to get too technical, but they'll lock up their tokens to validate blocks. But these are the ones that do ICOs, where they're issuing tokens and you don't know, how much the insiders own or where they're dumping in. The ones that they're leaving alone that they're not deemed securities are called proof of work, right? This is pure decentralized companies. No third party involved to validate the blocks. No central issue of tokens like an ICO that can be manipulated. And those names, I've always said, researching this industry for 5 years, 90% is shit. It's garbage. The 10% is where the most innovation is coming from. Someone that covers trends all of my life. Go to Consumer Electronics Show every year, just go around the world, just being very early in trends. It's amazing the innovation that's taken place in this space. I'm glad there's a washout, but right now you're looking at pretty much a credit crisis.com event where during a credit crisis, it was 22% of companies are trading under $10 in the S&P 500. So same with crypto, you're able to get the best, the largest, the ones with the best technology, the best backings are still down 75, 80% and offer massive upside potential, more potential than you could see in the market by far. It deserves a place for your speculative capital. Another newsletter we offer is Money Flow Trader. These are like our 3 high-end products, expensive products. And Money Flow Trader is really cool. It just it uses you buy puts to bet against stocks and sectors, long-dated puts. I think that newsletter is going to be incredible over the next 6 months because expectations are very high going into earnings. You need a 20% decline and you can look at 2x, 3x, 4x gains in some of these things, which is money flow trader. And I think that's going to happen over the next 6 months if I had to guess. So those 3 newsletters. But that's pretty much what we do here, and some ideas I wanted to share with you. For the first time ever for our clients only, we offered a special discount. Those retail products retail for $5,000 a year. We've sold them at that price for the majority of 5 years, 6 years since we've been around, and we lowered them significantly to $1,000 for a year only. And I'll have someone put in a link in here in the chat room. Why would I do that for? Why would I discount my high-priced products? Remember, I said we're independent, and when we're independent, my job is to show you gains. These 3 products at the same time, we've never seen, or I've never seen a better opportunity over next year for all 3 of these products. And my job isn't for you to subscribe to $1,000 and then say, "Oh, Frank, I'm going to subscribe $1,000 for no." This offer is only for our subscribers, and we're offering it to just Jeff and stuff like that, and RagingBull. But the goal here is that you subscribe. You see our research. I do everything in video. I share my screens. You see, 30-minute videos of really breaking down each company. But the goal here is for you to do very well over the next year and then subscribe for the next 10, 15 years. And that's how we've done business. So it's rare that you see an opportunity with these 3 newsletters at the same time. So that's an offer going on. And plus, the first 100 people subscribe get to talk to me for 10 minutes. I can't give you personal advice, but it's a personal phone call. And we still have some slots left for that. But again, that's where we are in the market right now. And just looking for more and more ideas. But small caps, I'm really seeing great ideas compared to large caps, especially with the economy. I'm not crazy about the economy here, but just small caps have not participated as much, and they've been left for dead. And the risk reward hasn't been this great for at least, I would say, the last 10 years, 12 years that I've been doing this. So somebody drop the link in the chat if you're interested in that. If not, no worries. Now, let's get to, I want to take some of your questions. So I'm going to be new to this technology, and hopefully I can see some of the stuff. Okay, let's go from DToro. So we got a little time here. Jeff's going to throw me out of here at like 2 minutes to 1. So I want to try to take some questions for you guys this first time. And thank Jeff. He says, welcome, Frank. So the man, the legend. I don't know if I'm a legend. Look, I just work really hard like Jeff. And, I enjoy talking to subscribers and stuff like that. It's really cool. But so DToro says, Frank, you always talk about Bitcoin, the importance of crypto projects. Do you think Cardano is one of them? Yes, Cardano is good. I would worry a little bit. I'm not too sure. The SEC listed, I think it's like 24 cryptocurrencies. I'm not too sure if Cardano was on that list. I don't know if Avalanche was on that list. Again, these like, level 2 guys that provide a way to use things like Ethereum, or it's a layer on top of Ethereum where you don't have to pay the massive fees, and it's also much faster transactions. But again, another big name that looks really, really good. And it's not that Cardano might be deemed a security. It's such a good company that they might say, okay, we're going to register then. We're going to register with the SEC. Coinbase has already taken out licenses for security tokens. They did it 4 years ago. We launched our own security token. We're the first ever to do it a few years ago, 3 years ago, I think 4 years ago now. Curzio Equity Owners, it's called, trades on T0. We're like a publicly traded entity that gave equity stakes to investors. It's not a utility token, right, that you don't have equity in. So you could participate in the growth of our business, which is cool. And it's just tokenization, right? It's like the market. You sell off a piece of your business like you would do in real estate. Like if you own commercial real estate, it's illiquid. If you have $100 million in commercial real estate, you could sell off 20 million. It benefits. And this is how trends, if you want trends to really develop, make things cheaper and easier for everyone, right? And if you look at tokenization, I'm sitting there with $100 million commercial real estate. You could sell off 20% of that. I get a check for 20 million. That's great for me. The other 20% is spun off in a vehicle where that would trade in a secondary market. They would get tokens for that equity stake. And I could provide an interest payment, a yield on that from the leases, right, to make it worth it for them. This way they could hold long term. And now retail investors for the very first time really can own commercial real estate without having to buy a REIT and go through all the BS and stuff like that. So we did that for our business. And when I look at tokenization, it's incredible because I thought this market would open up years ago, but then we had SPACs, which is, again, the biggest fraud in the world. If you look at Virgin Galactic, Chamath, those guys came out, and Richard Branson, both of those guys came out and said that, when this thing IPO'd, I believe it was 2020, and they said that, hey, this thing's going to be profitable in a year, and we're going to send people to space by 2021. And before we even got to that date, Chapman sold out for 200 million. Branson sold out for 300 million. Again, SPACs, if you don't know, it's a way for insiders where they don't have to disclose everything and warrants and shit like that, all the pipe deals. And it provides a faster liquidity for them instead of a 7 to 10 year liquidity, right? Which is if you invest in a private company, the liquidity period is an IPO, or if you get acquired through SPACs, they're like, holy shit, this new vehicle, we can't believe that everybody's buying into this, right? So you buy something that's basically a holding company and you merge it with a private company. So he's trading already. That gives a quicker lockup for them to get out. And then you didn't have to disclose warrants and all the pipe deals. So if you're wondering why people were selling Virgin Galactic at 10.9876 and you're like, holy shit, why are they doing that? Because it came out at 10. That was a price you could buy that. It's because they owned it at 50 cents and $1 and they're still making money on it. So with our token, it's different. We had no funds come in. It's all raised money through our list. It's the average investor, their average price is $4.25. So which is good because we want the people in there for the long term. But tokenization is massive. It's huge. I think we're going to be able to trade on Coinbase. Gemini has their licenses. Again, they thought it was going to happen a lot quicker, but you had SPACs and then you had COVID. But the regulation and tokenization, that's the next step here. And I think when I look at Cardano, I could see them actually coming out and saying, if we're forced to register, we'll register because the industry, it's $1 trillion established industry, crypto. Think about that for a minute. So you're an established industry of $1 trillion. AI, everyone's going crazy. AI, holy shit, you got to get into AI right away. AI is going to be a $200 billion industry next year. Probably won't hit $1 trillion for several years. And EVs is a couple $100 billion. Crypto, $1 trillion established market. That was $3 trillion. Lots of innovation coming in. And now what did you see? Now that the SEC has those regulations out there, at least has some kind of a framework. BlackRock just filed for their Bitcoin ETF. They had to refile with special clauses showing going to show much more information. Fidelity, ARK Investors, mark my words, ARK Investors is probably going to be the first one to be approved. They refiled the quickest. You have Invesco, Wisdom Tree, and then you have this brokerage firm that was just announced. No coincidence. It was announced when all this shit, hit the fan. And now that these institutions know the regulations, you have Fidelity and Schwab partnering with Citadel and Paradigm, two massive private equity firms, just launched a crypto exchange, basically. So crypto trading platform that doesn't take custody. It means they don't have individuals, money on their platforms. They just do it through different third parties and stuff. Just to put that in perspective, guys, of why that's a big deal. You're talking about BlackRock, which is 10 trillion assets. These guys have massive political ties, right? They're not going to do this unless they're sure they're going to get approved. These guys don't make mistakes. You're looking at Fidelity and Schwab, again, trillions in assets under management. They have 70 million plus total accounts that are going to have access to crypto, many of them for the very first time. And no coincidence, the 4 that they're putting on that platform is Bitcoin, Ethereum, Bitcoin Cash, and Litecoin, because those are already deemed non-securities. Any one of those 4, or if you're buying some of the top names you right now, you're probably going to do very, very well. The amount of money that's going to flow into this now is insane because crypto has been driven up by what? It's been driven up mostly by retail, not really institutions. Venture capitalists and stuff like that. Anderson Hart's gotten into it, but crypto provides a great opportunity. I know a lot of it's bullshit. We've said a lot of it's bullshit, but the innovation that's taking place, considering it in DeFi, where traditional finance, I walked on Wall Street for a very long time. I was Jim Cramer's head analyst for 5 years. Yes, that Jim Cramer. I'm probably going to see the comments go crazy, but when I look at just the analysts, by the way, I'm getting, with Jim Cramer is kind of funny because I know it's going to light up and everybody hates the guy. The guy's actually not so bad. But with Jim Cramer, I had a great opportunity with Jim Cramer. I was going to tell you guys a couple of stories about Jim Cramer, which is kind of funny. But he went to my wedding. Great, great guy. And when, working for him, my job was really to analyze every single company, every single sector, and do so much. And I know he's never really been in crypto. He's been all over crypto and the back and forth and stuff like that. But when it comes to Cramer, not such a terrible guy. He's a guy that gets pissed when he goes on TV if he gets things wrong and stuff like that. But he's pretty cool. But I didn't want to go on a Cramer rant there. But getting back to crypto, I just find it a great opportunity to own some of the big names on a platform. the best names are down 80%. And again, this is technology, traditional finance, and this is where I'll go. And traditional finance has never been disrupted. And think of what technology has done to every single industry over the past 20 years, right? We still have stupid fees that we charge for banking and just investment banking fees and wire fees and things like that, and transfer payments, which is so easy through crypto and so much quicker and faster, and you don't need a third party. And that's going to get disrupted. It's a reason why you have some of these institutions going in right now. So let me see, 12:45. Let me see if I could take just a couple more here. Some Bitcoin. Frank, let's make some cheddar. I'm trying to do that for you guys. So any questions you guys want to have? Let's see. Other than that, trying to look through this really quick. Again, Jeff, thank you. The man, the legend. Love it. But guys, any questions you want to drop in the chat, feel free. Halika says Bitcoin is my reserve currency. By the way, it's interesting you say that, because I used to make fun of people who said that the dollar will lose its reserve currency status. I'm not calling for that. It's not going to happen. They're going to lose it. However, did a lot of research on this. If you look at the trend and dollars and how fast other countries are getting out of the dollar, it's insane. It used to account for about 75% of the total currency in terms of percentage with the US dollar. Now it's like 58%. And that happened because when Russia went to war with Ukraine, we were supposed to have sanctions. The US was not supposed to take them off the SWIFT system. And when they did that, that scared the shit out of every country, because you shut down their economy immediately. Now, say if someone doesn't believe in our climate agenda, could we shut them down and get them off the SWIFT system? It scared the shit out of countries where you're looking at the BRICS nations. They're having a conference in August, right, next month. The theme is, how do we rely less on the dollar? This is something they would never say publicly. France came out, Europe came out and said that, we have to find a way to wheel ourselves off the dollar. You're looking at China as well, actively saying it in public, and energy was always priced in dollars. Now they just did the first LNG deal with the Saudis that was priced in yen. So if you look at the central bank buying, what does this mean? Does it mean, holy shit, the country's going to end, dollar's going to lose reserve currency? Absolutely not. Own Bitcoin, also own gold. The central banks, the buying of gold by central banks is the highest it's been in a half a century. And this year is supposed to dramatically come down. It's going even higher. And the reason why they're doing that is because they're launching, every one of these countries, all developed emerging markets, are launching their own central digital bank currencies. Kind of like euro, right? In order to compete with the dollar, you have to team up. Bold prediction here. I think that they're going to have a universal digital currency to compete with the dollar, and it has to be backed by something. Ours is backed by the full faith of our government, which is kind of crazy when you think about it. And it's going to be backed by gold. The amount of gold that they're buying is incredible. And I'm not telling you to buy gold as a safe haven, or gold as negative real interest rates, but gold makes a lot of sense, just fundamentals, where how much is being bought. If you're looking from a stock perspective, take the name off of Newmont, off of Barrick, and just look at those companies, and look like technology companies in terms of their margins, right? These guys produce for $1,000, $1,100, it's $1,900. They're making money hand over fist. Also in junior mining stocks, Curzio Venture Opportunities, for Curzio Venture Opportunities small cap, we actually offer private investments to credit investors in that newsletter. You don't have to be in credit to subscribe, and have very good ties. Been speaking in Vancouver at some of the largest conferences for over a decade. Very, very good ties to some very great deals. Took me a while. That's a shitty industry. If you think that crypto is the biggest scam in the world, I've met young people and they really don't know what they're doing sometimes in terms of structuring. When it comes to the junior mining industry, those guys know exactly what it, and they're going to F you every single time. I mean, that's the most shadiest industry. So you really have to have good ties and know what the good deals are. But some of those deals we share where you get warrants and things like that, which is pretty cool in Curzio Venture Opportunities. But got one more question here because we had 12:50. This is from, I'll just call you GE. Says, hey, Frank, in your crypto intelligence service, have you ever alerted Pepe to your subscribers, please? And overall, what is your approach to early shitcoins in your service? No. And we're not about shitcoins, okay? The thing about Pepe and the thing about, we just recommended a coin that focuses on tokenization. And got its ass kicked because it's more like focusing on, you can establish a security token and the whole platform and being able to do that. And that market hasn't developed. Now it's starting to really develop. The way you make money on these shitcoins is find one. You're going to see pump and dump schemes every place, which is all over Twitter. You can get involved in that and be trading back and forth. Again, Pepe's up like, this is what I mean with crypto. I think it was up 20,000, 30,000%. You can't see those gains in stock, right? In a matter of like a month or a month and a half. But try to find these things that are eventually going to make their way to the bigger platforms. Because if you could buy them before that, the massive liquidity they see by going on a Coinbase or a Binance or some of the big platforms is massive, and that gives you a good opportunity. Usually that they'll surge and they kind of peak, and you'll see a little bit of sell-off. But that's how I really look at shitcoins, where they're not really shitcoins that we're recommending. They're good names. I make sure that they're backed by right people, that their structure I could see, that they're transparent. Seems obvious, but most of these are not. They're not transparent and telling you what they're doing. And most importantly, make sure that utility feature, they have a utility feature. Otherwise, it's worthless. You're not getting equity. Right? It's like Dave and Buster's. You guys might be familiar with Dave and Buster's. You get the card and then you play. You could take that card. That's a utility. You could go to any Dave and Buster's. If Dave and Buster's closes, you don't get your money back. If these cryptos don't have a utility feature, they're worthless. I mean, Microsoft come in and buy one of these names like Cardano for $100 billion, and you get nothing. You don't have an equity stake in it. So it comes from the utility, which is very, very important that you understand that. And just I make sure that that utility feature is definitely worth it. And we also have an early stage AI investment in a crypto, which is really cool, which I like because it's just very early stage. You use that technology, incorporate that into your company. And that's fascinating to me, right? Because everybody wants to learn more and you have to use their token to do it, but that's pretty cool. And then Jackie, if crypto's backed by gold, why buy crypto? I didn't say crypto's going to be backed by gold. I'm saying that the central bank digital currencies are going to be backed by gold. So Bitcoin's not backed by gold. Bitcoin is kind of like the young person's gold, I would think. Limited supply. But, and he said, why not buy gold direct? Is it because of liquidity? You could buy gold direct and you shouldn't have liquidity concerns at all. You could do that for ETFs. And that's why it's such a big deal. It's not just the Bitcoin ETF for approval, guys. It's much more bigger than that. It's once that's approved, it opens up the floodgates. So happened 20 years ago with spiders and what is the Vanguard, right? With the S&P that has hundreds of billions now, trillions in it. It's now it's going to open the door to Ethereum. Now it's going to open the door to manage structural ETFs within crypto. Now you're going to see more and more liquidity. You guys know traders, the more liquidity you have, the better it is. The more people you're going to have, the more drives you have in stock, and the more institutions are able to come in. There's proof of work screens that I have that shows like 30 stocks that proof of work. Again, the SEC is not touching the proof of work companies. They're going after kind of the proof of stake companies. So, that's the best opportunity. There's a lot of those names that I like on that list. But that's really where we are in crypto. So how about buying Ethereum? Buy Ethereum right now. You'll be fine. Where's it? 1900, 2000. I think Ethereum and Bitcoin will go to their highs in the next 12 months. To just massive new buying that's going to come into these names. And Ethereum is the best smart contract platform on earth. Yes, the fees are high, but they have different layers to help out with that. But Ethereum is just that's where all the NFTs come from. Everything comes from. That's a platform of choice, and Ethereum is just incredible. It's incredible. Ethereum, Bitcoin. I'm not too high on Bitcoin Cash. Litecoin I buy now because that's one of the ones that you're going to see tons of new people get in. Kind of, not one of the bigger names. Those are names I would focus on. So, all right, guys, I think that is it. I'm coming to the end here, 12:53. Just want to say to Jeff and RagingBull, thanks. Hopefully I entertained you a little bit and provide you some ideas, questions, or comments. Feel free to email at frankcurzioresearch.com. Other than that, I'll see you guys on Wall Street Unplugged Premium tomorrow, which is just a paid version of our podcast. We actually offer ideas and tradable ideas for our Dollar Stock Club newsletter. That's like $10 a month and stuff because we're just giving away too much for free in our regular podcast, which is Wednesday. But for subscribers to Premium, take care, and I'll see you tomorrow.